Good morning. This is Bloomberg Daybreak Europe. Happy Friday. I'm Tom McKenzie in London. These are the stories that set your agenda. The bromance is over, but Elon Musk moves to cool tensions with Donald Trump after their public spat drives down the value of Tesla shares by $150 billion. A phone call between Presidents Trump and Xi calms markets, but jitters remain ahead of today's key data on the US labour market. Plus, a capital conundrum for Switzerland's biggest bank, UBS, said to be told it may need to put aside as much as $25 billion against future losses. So the public feud between President Trump and Elon Musk breaking into the open yesterday in pretty dramatic fashion, being tweeted or at least put on X and, of course, Truth Social as well, President Trump's own platform. We saw that play out live. The impact as well you saw across the stock for Tesla, which ended the day lower by 14%. As we mentioned in the headlines, down $150 billion US. So the ripple effects are there for the Asian session as well, with some of the key suppliers to Tesla also taking a hit as well. And we'll look at that broader impact shortly. Across European futures, after 3 days of gains, pointing lower by about 0.1%. Really, for the European markets, the focus will be for many in the space right now. The non-farm payrolls data, of course, which breaks later in the US. FTSE 100 futures here in the UK, also a little softer, down 0.1%. S&P futures then, after the weakness that came through by the end of the session yesterday, pointing to gains of 0.4%. The Nasdaq 100 was hit as a result, of course, of the Tesla drawdown. But you're currently seeing a little bit of relief coming back into the Nasdaq 100, pointing to gains of 0.3%. Let's flip the board and have a look cross-asset then. You saw a little bit of selling pressure across Treasuries and the dollar yesterday. Today, Treasuries and the dollar relatively stable, 4.38 right now on the benchmark 10-year, 4.39 as we lead up to that non-farm payroll print, an expected number of around 126,000 in terms of jobs added. That would be pretty significantly softer than 177,000 in the previous month. Unemployment expected to remain at around 4.2%. Euro dollar at 114, Brent a little softer by 0.3%, and gold getting a bid up 0.6%. Let's briefly check in on the Asian markets. The Indian Central Bank coming through with a surprise cut of 50 basis points to 5.5% and changing their stance as well to neutral. So we watch the impact across India. Currently, the Indian rupee at 85. Not much movement right now on the currency, but it has been volatile on the back of the lines coming through from the RBI in India. Briefly, across the index, the regional index, largely unchanged, but still set for 7 gains. 7 gains out of the last week, 8 weeks. 7 weeks of gains after the last 8 weeks in terms of the Asia-Pacific region. HSI a little softer, down 0.3%, and the Nikkei in Japan gaining 0.5%. Now, Elon Musk has signalled then that he will move to cool tensions with US President Trump after the very public unravelling of their bromance. The two attacked each other from their own social media platforms with explosive claims over issues both big and, frankly, trivial. Musk went as far as agreeing with an X post calling for Trump's impeachment. The president, in turn, hinting he may terminate US government contracts given to Musk's companies worth billions of dollars.
I've always liked Elon, and it's always very surprised. You saw the words he had for me, the words of, and he hasn't said anything about me that's bad. I'd rather have him criticize me than the bill, because the bill is incredible. It's the biggest cut in the history of our country. We've never cut. It's about 1.6 trillion in cuts.
OK, let's get more on the falling out of two of the world's most powerful people, of course, with our EMEA news director, Ros Mattison. Ros, I don't know if you were following this live, but it was quite a remarkable thing to watch, wasn't it? We saw in the build-up to this the tensions around, of course, the deficit and the tax bill that's working its way through the Senate right now. So we knew that Musk was unhappy, but it exploded into the public. Where does this leave both President Trump and Elon Musk, given that we now hear reports that maybe they're going to have a phone call later today?
Well, as you say, just an extraordinary public blow-up between them and some very personal things said against each other. But just as quickly, it seems, perhaps there are moves already to patch things up. We can see from Elon Musk's posts in the wee hours, yes, he's open to doing so, agreeing with people posting on social media, Bill Ackman among them, saying, guys, you need to cool this down. You know, Donald Trump saying to Politico, you know, it's going very well in his relationship with Musk, and Politico reporting, in fact, the two men are due to talk on Friday at some point. The White House is arranging that conversation. So that kind of explosive display of anger at each other on social media, trading barbs, perhaps very quickly followed by an effort to cool things down. And this is kind of a sign of the relationship that they have. We've seen frustrations bubble up before, but there's always been a very careful effort to keep that under wraps behind the scenes. They've disagreed on other things before, aside from this big tax bill that Donald Trump is trying to get through the Senate in the US. It's just that was a moment where everything burst into the open. The question is, even if they cool things down, you know, is the relationship repaired, or is this just a temporary fix?
And to that point, Roz, I mean, there were some almost kind of taking bets at the start of this relationship between Trump and Musk as to how long it would last. Some suggesting maybe it's going to be 6 months, some 8 months. So to some extent, it's not a surprise that the relationship is breaking down, given the nature of both individuals. And yet to see it in that public spotlight, what was, as you say, remarkable. What does it mean then? What are the implications in terms of Trump's standing? What does it mean in terms of the Republican Party? What does it mean in terms of the bill that Trump is so clearly keen to get across the line?
Well, as you say, some people said it was a matter of time. You've got two very big egos involved here, but it comes at a very delicate time for both of them, arguably, particularly Donald Trump, who's trying everything to get this bill through. He's personally spending hours on the phone lobbying Republicans, saying we've got to get this done, and it faces a very tricky path in the Senate. And if this bill gets amended in any way whatsoever, it has to go back to the House for further review. So he's wanting to get this done very quickly. He's up against a lot. And for Republicans, there are key questions here of loyalties to Trump or to Musk, because obviously Donald Trump is saying to them, you need to listen to me. But Elon Musk is the one with the money when it comes to, you know, the midterm elections, which are really not that far away. And a lot of his campaign money could help them individually. So how they patch this up, or whether they patch this up, has a real impact potentially on the bill itself, but also for individual Republicans, with one eye very closely, no doubt, already on those midterms.
OK, Bloomberg EMEA News Director Roz Mattison, thank you very much indeed, in terms of, and with the context around, of course, the breakdown in the relationship between Trump and Musk and whether or not they can repair it, of course, as we hear reports of that phone call later today. Meanwhile, in the room during much of this, during, of course, the breakdown in the Oval Office, was the German Chancellor, Friedrich Merz, who successfully navigated that meeting with Donald Trump in the Oval Office without falling victim to the public humiliation the American president has doled out, of course, to some other leaders. And mainly, it seems, largely down to the fact that Trump was focused so much on what was happening with Elon Musk. Let's bring in Bloomberg's Christoph Raut in Frankfurt for more. Christoph, we shouldn't overlook the fact that this was a significant meeting for the new German Chancellor, and a risky one as well. Did he pull it off?
Good morning, Tom. Yeah, I would say definitely yes. There was a lot at stake, as you mentioned. It was a very closely watched meeting, a very important meeting for the new German Chancellor, Friedrich Merz. And I think the main takeaway is essentially it could have gone a lot worse, effectively, since you already also indicated we can all remember the sort of very public spat between Volodymyr Zelensky, the Ukraine president, and Donald Trump in the Oval Office. We can remember the visit of the South African Prime Minister Ramaphosa, who also had a pretty public, very controversial exchange in the Oval Office with Donald Trump. So it went a lot smoother for Friedrich Merz last night, and that was very important. You could sense that there were some areas where they don't necessarily agree to 100%, especially when it came to describe Russia's role in this war, Russia's role as the aggressor, as Friedrich Merz put it. whereas Trump obviously was basically comparing like the situation to a fight between two children that are basically kicking each other and need to be separated. So there were some differences, but it didn't lead to like a full-blown sort of exchange or broader dispute, fortunately for the German Chancellor.
OK, yeah, there was a lot on the agenda, wasn't there, for the Chancellor in that meeting. Bloomberg's Christopher Rao, thank you very much indeed. Now, the Trump-Musk feud has stolen the thunder from news that China and the US have agreed to resume trade talks after a long-awaited phone call between the country's two leaders.
I think we have everything. I think we're in very good shape with China and the trade deal. We have a deal with China, as you know, but we were straightening out some of the points. By the way, he invited me to China, and I invited him here. We've both accepted. So I'll be going there with the First Lady at a certain point.
OK, let's bring in our chief North Asia correspondent, Stephen Engel. So President Trump planning already a trip to China on the back of this call. Steve, what for you were the key takeaways?
Well, obviously they talked, and that's what's been building up because following that trade truce a few weeks ago in Geneva, things have gotten even more frosty between China and the United States. China throwing allegations that the United States has been building up pressure on China by talking about threats of revoking Chinese visas, student visas in the United States, adding to more tech restrictions in the United States, also essentially saying that China had backtracked on its promises made in Geneva at that truce, especially on the relaxation, apparently, of export licensing controls on rare earth metals and magnets and the like. None of this was necessarily resolved in this 90-minute phone call between Trump and Xi. But they did bring the temperature down, as we just heard from President Trump saying the relationship and the trade relationship is in good shape. He did admit that they had gotten off track a little bit, but now they've talked. They came to some mutual understanding, but we don't know what that is. Were concessions made? Because the Chinese readout from this phone call was much more pointed than Trump's assessment of the call. They basically said that Xi Jinping urged Trump, if not demanded Trump, to remove these so-called negative measures that the United States has placed on China recently. The biggest negative measure would obviously be those tariffs. So keep in mind, there is a shelf life to this reprieve on the tariffs. So we don't know if there's been any kind of man-to-man verbal agreement that, hey, if we get this benchmark completed and we talk further, which they pledged to do, they will then make this, promise of further tariffs, moratorium more permanent. We don't know. That's why there's a lot of uncertainty. It was a good step. But keep in mind, European leaders are going to be going to Beijing at the end of next month. They are also trying to get in better stead with Beijing. Beijing definitely wants to court European leaders at a time when they are obviously facing a multitude of issues with the United States. One phone call does not resolve the issues, obviously, but it does bring down the temperature. Tom?
OK, excellent context with Bloomberg's chief North Asia correspondent Stephen Engel, tying in the European line as well, given that visit, as Steve was saying, by European leaders later to Beijing. Now, the latest US jobs report is expected to show payroll growth likely moderated in May. Let's bring in Bloomberg's Valerie Teitel for the data point of the day, really, when it comes to these markets. Val, what can we expect?
Data point of the day, I would say data point of the last few weeks. NFP dropping at 1:30 p.m. London time. It's one you need to clear your desks for. The estimate is for 126, which will be a step down from last month's reading of 177. But a 126 would still keep the 3-month average around 160K, which is still solid run rate for U.S. economic growth. The unemployment rate is expected to stay steady at 4.2%. An unexpected rise in the unemployment rate might tempt some more dovish language from the Federal Reserve. But there is a plenty amount of nervousness about this number today. Not only did we have ADP coming in soft on Wednesday, its lowest reading in 2 years. But jobless claims continue to creep higher. Yesterday was another unexpected rise in jobless claims. We now hit a highest reading since October in this weekly initial jobless claims figure. So that adding to some nervousness around this print today. That the weak jobless claims number did see 10-year Treasury yields hit a fresh 1-month low at 431 yesterday. My eyes are going to be on the bond market for the initial reaction from this print. If we do get a softer print than expected, maybe we start to bring forward those Fed cuts, and that's some kind of sentiment that can help the equity market end in the green on the week.
OK, Bloomberg's Valerie Turtel on the market importance for this jobs data crossing later today. Valerie, thank you. Later in the show, we're going to assess the damage done to the world's richest man's business empire. Yes, of course, Elon Musk. Following his spat with the US president, we will break that down for you. So stay with us. There's plenty more coming up. This is Bloomberg. Welcome back. Now, UBS is set to find out whether it will be forced to drastically beef up the amount of capital it holds when the Swiss government publishes a draft law this afternoon. Switzerland's biggest bank faces having to maintain as much as $25 billion in extra capital if the government decides it should be able to fully cover losses at its foreign subsidiaries. Here's a reminder of how we got here. UBS is in a high-stakes showdown with Switzerland. The assets of the world's biggest wealth manager are twice the size of the Swiss economy, stoking fears among officials that a banking crisis like the one that brought down Credit Suisse would be all but impossible to control. So, Swiss lawmakers want UBS to boost its reserves to protect against 100% of any losses at its foreign units. The extra capital required could reach $25 billion. But CEO Sergio Motti says the plan would put UBS at a major disadvantage with peers. It could take until 2029 for any law to come into force, but UBS may not wait that long. Measures being considered even include moving its headquarters out of Switzerland. However remote, it's a possible scenario that will surely catch the attention of lawmakers in the Swiss capital, Bern. OK, for more on this, I'm joined now from Bern by Bloomberg's Bastian Benrath-Wright. Bastian, what will we hear then from the Swiss government today? Walk us through what to expect.
Good morning, Tom. Yeah, so I think it is important to remember here that while the capital question for UBS is the most prominent one which the government will answer today, it is actually showing us a whole package of measures which it came up with in response to the Credit Suisse crisis. So, for example, we will also hear about what the regulator FINMA should get in kind of additional powers, because part of the lessons learned from the Credit Suisse crisis was that FINMA had too little powers to enforce its supervision decisions on Credit Suisse. So we will also get an answer probably to the question if the government supports to give FINMA the power to fine, along with the capital question. Otherwise, we will get some more details on how they will, what other resolution tools they will propose. And yeah, these things are what is going to come out of Bern today.
What do we expect the implications will be then for UBS? They're girding potentially for that $25 billion hit.
Exactly, yeah. So probably the most watched news today will be this number. So the government is expected to give a number, how much more equity capital they think. It's obviously a moving target because it depends on a lot of factors, but they think UBS needs to accumulate to fulfill these new rules, which the government is going to present today. So we expect that they will come up with this. And this is obviously a very big question for buybacks, because if you look at UBS stock price, then it has pretty much stagnated over the past year, whereas European peers have rallied by some 40%. So obviously, like, this whole uncertainty about like how much more capital UBS will need to hold has been weighing on their share price, and so it is quite possible that whatever the government will say today, UBS will follow with a reaction, and then some market moves are quite possible.
OK, so we will watch that top number as well as the additional details. Bloomberg's Bastian Benrath right with that really important setup to that consequential set of decisions of course, at least detail coming through from the Swiss government later today. Coming up, more on the fallout from the very public breakup between Elon Musk and Donald Trump. We're going to hear from an early investor in Tesla on why it's so bad in terms of the news for the world's richest man. We'll hear that interview next. This is Bloomberg. Now, about $150 billion was wiped off the value of Tesla as Elon Musk's very public breakup with Donald Trump played out in real time yesterday. The spat wiped $34 billion from Musk's own personal wealth. One of Tesla's earliest investors has described it as a disaster for Musk. Ross Gerber also told Bloomberg there could be consequences beyond Tesla.
This is a disaster for Musk. I don't know if I can spin it in a positive way because it's just so beyond any intelligent businessman's behavior would be. I can't imagine after putting Trump in there that he would then turn Trump into an enemy of all things, because he's still the president of the United States. And Elon just tweeted something like, well, I'm going to be around for another 40 years and he'll only be around for another 3.5. And I think that's really ignorant thinking, because Trump is president of the United States, whether we like it or not, and Elon's going to have to live with this for quite some time, and it could be very detrimental to him and his companies.
And this brings up a good question just about leadership in general. There's been a lot of talk when with this new administration, how CEOs were able to navigate, and we've seen a lot of CEOs do it well. For better or for worse, a lot of them have gotten pats on the back for the way that they've courted this administration. Understand that for better or for worse, these are the people in power, and you have to at least appease them to some extent. And I do wonder about the leadership at Tesla and the idea that he's making this much more personal and not understanding that he has a duty not just to himself, but to all the stakeholders in his companies to find a way to be cooperative with this government in some way or another, particularly given how much his business depends on government contracts.
Correct. And obviously Elon isn't functioning to the benefit of his shareholders and hasn't been for many years. And, you can take it any way you want, whether it's the purchase of Twitter, the, XAI, and now this whole political disaster. None of this has been good for Tesla shareholders, and I've been saying this now for years. The board of directors is so bad at Tesla, and let me tell you, there was just a letter that's many shareholders from institutions and pension funds had written the board of directors about Elon Musk and reining in this kind of behavior, and I can't assume that this isn't going to lead to massive shareholder lawsuits against the board of directors and Tesla for the loss in value from this behavior, which is clearly detrimental to its shareholders.
Why not make the change? Look, I understand that he has kind of a singular identity with this company, but why not just move him to like a chairman role or something and bring in a real operational person? I mean, you think about the success that SpaceX has, and a lot of people talk about that primarily because he's not really in there making the day-to-day decisions. He actually has someone competent running that, and I think that's why a lot of people, quite frankly, are championing at the bit for that company to go public. Isn't it now time? He's been at the helm of Tesla for so long, and you've seen the damage over the last couple of years. Why not just make that switch now?
Yeah, well, the next is going to be the damage to SpaceX, because SpaceX relies almost 100% on governments around the world and the U.S. government to fund it. And this is an easy target because we don't need to go to Mars, that's for sure. And so who's going to pay for all this stuff? And, the truth is that SpaceX valuation was probably cut in half today because of this behavior.
OK, the chief executive of Gerber Kawasaki, Ross Gerber, speaking to Bloomberg's Romain Bosti. Now, Harvard University has won a temporary reprieve from President Trump's ban on its international students entering the US. A US district court granted a temporary restraining order saying Harvard would suffer, quote, immediate and irreparable injury if the ban went ahead. A full hearing has been scheduled for later this month. Coming up, NATO agrees its most ambitious military ramp-up since the Cold War. The details on that just ahead. This is Bloomberg. Good Friday morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. The bromance is over, at least for now, but Elon Musk moves to cool tensions with Donald Trump after their public spat drives down the value of Tesla shares by $150 billion. A phone call between Presidents Trump and Xi calms the markets, but jitters remain ahead of today's key data on the US labour markets. Plus, a capital conundrum for Switzerland's biggest bank, UBS, set to be told it may need to put aside as much as $25 billion against future losses. Let's bring you a check on the futures then, with a melodrama between Musk and Trump taking a chunk out of the Nasdaq 100 yesterday, which fell about 0.8%. Tesla, as we mentioned, taking a knock as well, falling 14% by the end of the close. And suppliers to that company also under pressure in the Asian session today. European futures, you saw that cut, of course, as expected from the ECB yesterday in terms of interest rates to 2%. European futures pointing softer by 0.1%. FTSE 100 futures also pointing lower by 10 points. S&P futures currently pointing gains of 0.4% after the weakness of yesterday, and the Nasdaq 100, after being knocked on that Trump-Musk fallout, currently pointed to gains of 70 points. Let's flip the board and have a look cross-asset. The data point of the day, of the week, as Valerie Teitel was saying, is non-farm payrolls, the jobs data out of the US, expected to come in a little softer than the previous month. Of course, we'll watch the unemployment rate as well. The details in terms of the US labour market in focus. The benchmark 10-year currently at 4.38. Expectations the Fed will still cut twice this year. That may change on the jobs print later. Euro at 1.14, a little softer by 0.1%, and Brent falling 0.5. Gold, as a safe haven, getting a bid this morning, up 0.5%. Let's get back to our top story then, the Elon Musk-Donald Trump feud. Politico reporting in the last hour or so that White House aides have scheduled a call with Musk today to avoid any further escalation in that war of words. The Tesla CEO has signalled he is open to cooling tensions after differences between the two sides exploded in public yesterday. For the latest, let's bring in Bloomberg senior editor Bill Farage. So, Bill, for viewers who were still asleep when all of this unfolded, how did we get here?
Yeah, a pretty remarkable, almost minute-by-minute exchange between these two leaders. So, yeah, in the past few days, we have talked a little bit about the growing tensions between Musk and Trump. Musk voicing some of his disapproval of that big, beautiful budget bill that Donald Trump has gotten through the House and is hoping to get through the Senate relatively unscathed. But it really just kind of exploded into a full-on meltdown when Trump was in the Oval Office meeting with the German Chancellor today. And it kind of started off by saying he was very disappointed in Elon Musk and talked about how the elimination of those tax credit for electric vehicles in that budget bill was a problem for Musk. And while he's in there with the German Chancellor, Musk is basically live tweeting his responses to Donald Trump, saying that the president never would have gotten elected without his help, and saying that there's more details in the Epstein files that relate to Donald Trump. And it really ended with with Donald Trump saying that maybe we could save some money by canceling Elon's government contracts. And then Musk turning around and saying, yeah, maybe I'll stop my Dragon spacecraft flights to the space station. So kind of just a complete explosion in the matter of just over an hour. And now, as you said, they're starting to try to patch some of that relationship up and get things back on a little more stable course.
And there seems to be, Bill, something of an urgency now, at least from the aides around President Trump, to kind of reset this relationship, or at least put a ring fence around some of the damage that's been caused. Why do you just unpack for us why that would be important for both sides to try and close the gap a bit on this?
Well, it is one of the biggest public meltdowns we've ever seen with Donald Trump and anyone else, which is saying something right off the bat, right? But listen, you've got you've got the president of the United States on one side, and on the other you have the world's richest person, a man who poured almost $300 million into that Republican campaign, a man who is really the main link to get Americans into space. And who owns one of the world's biggest social networks. So those are two real titans kind of clashing heads there. And, I think the fear from the Republicans is that no one comes out looking good or stronger because of this kind of a fight. So there is an attempt, apparently Politico reporting, to get at least White House aides on the phone with Elon Musk to try to dial this back. Musk is signaling that he thinks that's a good idea. So where it lands in terms of those EV credits and things like that, who knows? But I think the war of words is going to calm down a bit overnight in the U.S.
OK, we will watch for that détente, if it comes, of course. Bloomberg senior editor Bill Ferries on that remarkable 24 hours or so in the relationship between Elon Musk and President Donald Trump. Let's get more details now in terms of the business impact of that feud, particularly with the lens on Tesla. Shares sinking, of course, as Musk and President Donald Trump went toe-to-toe publicly yesterday. That simmering feud, of course, devolving into a public war of words, as we've been discussing, between the two of the world's most powerful people. Joining me now for a look at the business impact is Bloomberg's Asia aviation and transport reporter Danny Lee. Danny, talk us through what happened to Tesla's share price yesterday.
Yeah, Tesla's shares falling 14%, and that's around wiping out $150 billion US. So it's an enormous wipeout there. And to Elon Musk's personal value, that's around $34 billion US. That's one of the single biggest losses or wipeout of wealth ever for anyone. And so it just speaks just to the extraordinary tension and the concern investors have and Wall Street has with regards to this relationship between US President Donald Trump and Elon Musk, these two very powerful people whose lives, politics and business has become so intertwined, right? And so therefore all the live tweeting and the angst that Elon Musk was showing, that very much played out in the share price of Tesla, and the fallout very much reverberating through the end of the session in the US. So yeah, it's quite an extraordinary split here. But as we've now seen, cool heads prevail. It seems like we may not see the end of it, and maybe there could be a truce on the way.
Danny, even if we do get that truce, for some, presumably, this will be a reminder. For those with exposure to Tesla, some of their major investors, this will be a reminder that, of course, Elon Musk has these moments and has had them in the past, courting controversy very publicly. There's a key man risk element, surely, that will be assessed now. Is this potentially a breaking point even for the board? Even if they do reset relations, it's a reminder of the volatility of Musk.
I think it does remind people of just the kind of issues at play here, and the fact that Elon Musk had backed Donald Trump with $250 million in order to get Trump back into the presidency. Clearly, the dealings of doing business with either Donald Trump or with Elon Musk, it's a very timely reminder of the volatility that these two big personalities have. And as we do see the relationship evolve significantly, it's really going to be an interesting time for politics and for business of who do you choose your side with. Particularly if the relationship does deteriorate, do you pick sides of someone like Elon Musk or someone very powerful in the form of Donald Trump? So these very two contrasting pictures here is a very timely reminder of everyone having to maybe pick a side going forward.
OK, Bloomberg's Danny Lee, thank you very much indeed on the Tesla impact as a result of this feud between Musk and Trump. Now, NATO defence ministers have signed off on the military alliance's most ambitious ramp-up since the Cold War. Secretary-General Mark Rutte said the measures were necessary.
We agreed on an ambitious new set of capability targets, and this is so important. These targets describe exactly what capabilities allies need to invest in over the coming years. Air defense, fighter jets, tanks, drones, personnel, logistics, and so much more. All of this is needed to keep our deterrence and defense strong and our 1 billion people safe.
In the meantime, President Trump says it may be better to let Ukraine and Russia, quote, fight for a while rather than pursue peace immediately. Bloomberg's Piotr Skolimowski joins us from Warsaw. Piotr, what is the significance then of the decisions taken by ministers this week? What is it meant to achieve? How does it set us up for that leaders' meeting later in the month?
Hi, indeed. So as we heard from Mark Rutte, what was agreed were so-called capability targets. What that means, these are highly classified lists of personnel, weaponry that NATO members have committed to developing or buying or having in stock over the coming years. And this obviously paves the way to achieving the new target for defense spending that NATO is supposed to agree on when they meet at their June summit later this month in The Hague. So the main focus here is that obviously we those, as I said, those lists are highly classified, but what we've been reporting is that one element of that is, for example, a 5-fold increase in air defenses, which are very important in that context given the situation that we have with Ukraine. What Mark Rutte said is that obviously what NATO wants to achieve during the summit is this 5% target. This is not just straight defense spending. This target has been divided between 1.5 for defense-related spending and 3.5 as the core defense spending. Why are we doing this? Why NATO is committing to that new target? It's obviously Donald Trump is the answer. He's been sniping a lot about Europeans not spending enough, of sort of free riding on American help, and the whole point of having this new target and having this capability objectives in place is obviously to placate Trump and making sure that he still continues to be part of NATO and the US is still there. And it seems that's basically the main goal of the meeting of defense ministers. And we seem to have a broad agreement, although, and at least that total agreement is going to be reached by the end of by the time the summit is held, as Mark Rutte said yesterday.
And Piotr, how does Ukraine fit into all of this?
Obviously, this broad-based ramp-up is important because of the posture that Russia has now with the attacks and the war that's been going on into 4th year now. So that's been front and center when Rutte yesterday addressed reporters talking about that. He actually mentioned ammunition. Sort of given the scale of the challenges that Europe and the rest of NATO is facing, is at this moment Russia is producing in 3 months as much as the whole NATO is producing in terms of ammunition in a year. So that gives you the scale of the danger. Ukraine has been invited into the summit, but there is very delicate diplomacy going around that and choreography. We are not clear whether President Zelensky is going to be invited into the main session. Probably unlikely to be there. Obviously, this is all going to prepare NATO for potential Russian aggression, but there's obviously the position of Ukraine and its future in NATO potentially is still a very sticking point. Rutte said yesterday Ukraine's path towards NATO is irreversible. At the same time, we already heard from Pete Hegseth when he first appeared at in Brussels for the NATO meeting a couple of months ago, is that Ukraine is not going to join NATO. So this Mark Rutte will try to keep off the table at the NATO summit, basically focusing on this 5% target.
OK, Bloomberg's Piotr Skolimowski breaking down what we saw in the meeting yesterday, the importance of that, of course, joining us from Warsaw as we look to that leaders' meeting for NATO that will take place in The Hague later this month. Piotr, thank you. Now to some of the stories making the news this Friday. Mark Tucker, the chairman of HSBC Group, is stepping down to return to AIA as non-exec chairman. HSBC says Tucker will leave at the end of September after almost 8 years at the bank. Board member Brendan Nelson will step in as interim chair. The UK has banned 6 water companies from paying bonuses to senior executives in an effort to make them do more to tackle pollution. Regulator Ofwat has powers to stop, quote, unjustified payments for poor environmental and customer performance as part of new legislation that comes into force today. Zahir Yousaf has resigned as chairman of Reform UK, saying he no longer believes working to get a Reform government elected is a good use of his time. The departure, after just 11 months, is a blow to leader Nigel Farage and his insurgent party, which is currently leading political polling in the UK. Coming up, the ECB cuts rate to 2%. Bloomberg is told that officials envisage a pause in cuts is on the cards. We're going to take a closer look just ahead. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. President Christine Lagarde says the European Central Bank is coming to the end of its campaign of interest rate cuts following the 8th reduction in a year. With the Eurozone suffering repeated blows from US tariffs, the deposit rate was lowered by a quarter point, as expected, to 2% amid that tariff uncertainty.
Higher tariffs and a stronger euro are expected to make it harder for firms to export. High uncertainty is expected to weigh on investment, but at the same time, several factors are keeping the economy resilient and should support growth over the medium term.
OK, I'm joined now by Bloomberg's economics editor, Zoe Schneeweiss. Zoe, we're also seeing lines just dropping the last minute or so from the ECB's Villeroy, of course, of the Bank of France, saying we have won the battle against inflation in Europe. Is it job done, then, for the ECB? Where do rates go from here?
You're right. The ECB is, in a way, in a sweet spot. We just had inflation numbers this week that showed that inflation in May dropped to 1.9%. The forecasts show inflation at 2% this year, inflation dropping a bit too low, 1.6 next year, then back to 2% in 2027. So in a way, what they wanted to do on inflation, they are there. Also, if you look at their rate cuts, that 2% on the deposit rate is bang in the middle of what the ECB describes as neutral rates, so rates that neither stimulate nor restrict the economy. So everything the ECB could do, they have done. The question now, of course, is what happens on tariffs and how would the ECB have to react to that? That July 9 deadline with Trump tariffs is obviously looming large.
Yes, so that uncertainty is there. Now, what will leave themselves, of course, optionality. But as you say, everything they can control, it seems they have been able to control, which has led to some to suggest that maybe, given what's happening, of course, with the World Economic Forum and Davos, that maybe, given there's an opening there, maybe Christine Lagarde might be tempted at this point to take a departure. Did she dispel that speculation yesterday?
Yes, I do think she did that. Up until now, there only had been spokespeople from the ECB saying she's determined to do it. Yesterday, she first at the press conference said quite clearly, I am fully determined to serve out my term. And then later in the evening, she was on French TV and there said quite clearly, I want to work to the end of my term. After that, who knows? I've got grandchildren. She highlighted as a pendant for flowers. So overall, said after that, I might do something else. But she did quite clearly commit to staying for the ECB until her term runs through the end of October 2027.
OK, Bloomberg's economics editor, Zoe Schneeweiss, thank you very much indeed on what we heard, of course, from Christine Lagarde, the path ahead and that speculation over whether or not she will still be staying at the helm of the ECB. It sounds like she will and has made that commitment. Now to some other stories making the news this Friday. Broadcom stock fell in late trading after a lacklustre revenue forecast, suggesting the AI spending frenzy is weaker than some investors hoped. The company forecast third-quarter sales of just under $16 billion. That's about $1 billion below the highest estimates. But Broadcom's chief executive says demand for custom AI chips next year will be stronger than originally thought. A second lunar lander attempt by Tokyo-based iSpace has failed after it lost contact in a blow to Japan's burgeoning commercial space industry. Executives say the company's Resilience lander didn't decelerate in time, and it was highly likely it made a hard landing on the moon. The failure casts a cloud on the firm's next mission, with bosses calling the impact uncertain. There's plenty more coming up. Stay with us. This is Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech, coming this June.
Only on Bloomberg Television.
Disinflation has slowed, and we're already seeing the effects of higher tariffs, which I expect will continue to increase inflation over 2025.
OK, if you can prise your attention away from the melodrama between Musk and Trump, then the focus is on the data out of the US when it comes to the jobs data. Of course, non-farm payrolls dropping later today. Expected, of course, to soften from the previous month. Not a big surprise there. Numbers expected around the 125, 126,000 in terms of the numbers. Previous print for the previous month, 177,000. So, yes, a little bit more softness. Unemployment level expected to remain at 4.2%. Some analysts saying if you get sub 100,000, that will lead to rethinking around the Fed expectations and pulling forward cuts. Now priced about 60-70%, the next cut in September, about 52 basis points, 53 basis points priced in for the full year, 54 in fact. So 2 basis points, 2 cuts of 25 basis points still priced by these markets. That, of course, could adjust on the payrolls print later today. So watch that. The Treasury market's right now relatively stable, but again, you could see some adjustments. The claims numbers, the jobless claims numbers yesterday were interesting in that they ticked up pretty significantly. So there's the number there, 247,000. If you aggregate that out over a 4-week basis, then you in fact get a kind of pretty continuous picture in terms of the softness that's come through. But about the softness, the weakest print you've got in terms of jobless claims, in terms of the pickup there, and the weakness that suggests about the labour market since about October. So there are reminders that this labour market in the US is starting, on the edges at least, to show some softness. And jobless claims, you could build that into the picture as we lead up to non-farm payrolls, of course, later today. Let's have a look at the Tesla story then. This is how the stock moved. By the end of the close, down 14%, and it was literally a live tweet and live Truth Social exchange between the president and Musk in the Oval Office. And you saw the first line coming through when Trump was asked about that, of course, in his meeting with Merz. He was asked about Trump and his attack on the bill, and he said, I'm very disappointed. And that's where you saw the first move lower in, of course, Tesla stock. Then Musk responding live to that on X, saying, without me, Trump would have lost the election. And it went on and on and on until you saw a 14% hit, $150 billion taken off the market cap of Tesla. We'll see how that changes if they have a conversation later today. This is Bloomberg.